Over the past year or so, the 3 metro-level apartment markets in South Florida have returned to the list among the nation's premier performers. How do the stats look as of Q2? That's going to be our focus today in Apart Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett. And Greg, let's get going right away digging through some of this data.
And we're going to jump in and talk about the occupancy figures. And these have been looking really good in this part of the country for quite a while. Overall occupancy for the 3 metros combined stood at 96.2% as of mid-2014, and those numbers have been running at roughly 95 to 96% ever since the beginning of 2010, so we are at 4+ years of really essentially full occupancy. Among the 3 metros, Miami is on top with occupancy at 97.2%. The rate is 95.7% in West Palm Beach and 95% even in Fort Lauderdale. And slice and dice the numbers, if you look at the performances by product niche and neighborhood, occupancy results are really good to great all across the board.
And let's shift gears to the rent side of the equation. And good to great is a good description for what's happening on the rent side as well. Quarter over quarter, the 3 metros combined to post effective rent growth for new leases at 1.5% during Q2. Year over year, rent growth measured 4.7%, which again puts South Florida among the national leaders. Miami was on top, just as for occupancy, with year over year rent growth of 5%. Fort Lauderdale at 4.5%, and West Palm Beach just behind at 4.3%.
Jay, great numbers on both the occupancy side and the rent side, and so let's look at some of the influences that have gotten us here. When we examine influences in the apartment market, we usually start with the latest and greatest and what's happening right now. But to really understand South Florida, I think you actually have to go back a little bit more than a decade, and let's go back to 2003. And the reason we want to go back to that point in time is that is when the existing unit count of apartments in South Florida peaked. And then after that, we had some condo conversions that reduced the stock. And even though we've been building in the last couple of years, we're still well below that peak level. So you look at the existing apartment count in South Florida right now, and we are still about 8% below the inventory number back in 2003. Let's compare that to the job count. We've had some good job growth in the past year or so, but you look at the big picture, we're not quite back up to that pre-recession peak. But let's again go back to 2003. Right now, there are 9% more jobs in South Florida than there were in 2003. So you put those two numbers together, and I think that's a really telling story. So again, to repeat it, we have 8% fewer apartments in South Florida compared to the count in 2003 versus 9% more jobs versus that decade ago number. You're going to get some great performance results with that relationship.
Yeah. Although I will say, though, with that disparity, developers are working pretty hard to make up that gap, and they're trying to
You can count on developers to try and do that.
That's what they do. And so they're working toward getting total apartment stock back up to that previous high. There are 12,575 units under construction across the South Florida region. That will translate to 2.8% inventory growth. And new supply on the way is pretty spread out across South Florida's 3 metros. Near-term expansion rates measure in at 3.1% in West Palm Beach, 3% in Miami-Dade County, and 2.5% in Fort Lauderdale Metro. And even on the submarket level, the building activity looks pretty manageable across the board. A couple of possible exceptions would be the West Miami Doral submarket and in the city of Fort Lauderdale, where inventory growth rates are a bit higher.
So let's put all this together, Jay, and what we would really see for the outlook in South Florida is we expect the performance to remain very solid throughout the near term. Occupancy running about where it is right now, maybe a little bit of a drop off, but over the next couple of years, probably no more than 100 basis points, if even really that much. Rent growth, because you do have the product in lease up, maybe slowing down a little bit from where it is, but still pretty darn solid numbers.
So Greg, we talked about all the basics, supply, demand, occupancy, and rent, but this is South Florida, so isn't there one more special topic we need to cover?
Yeah, we were doing the back and forth exchange here, and I drew the short straw and ended up with the condo topic. But,
Absolutely.
But I will jump in there. You look at every condo cycle in South Florida, and there's always a reason why we're saying this time it's going to be different. And the this time it's going to be different explanation for this cycle right now is the buyer profile. And the vast majority of buyers to this point are from Latin America. And supposedly they're not really planning to live in the units more than 2 or 3 weeks a year. They're not going to put them out into the rental pool. And interestingly, they don't really even seem to have the expectation that they're going to get big investment return on this. What they're really trying to do is place some capital in an environment that is more economically and politically stable. If that's the case, then what you can say is those units really don't impact the apartment market at all. Will that hold true over time? It's hard to say, but the encouraging thing is that if you look at the expectations for the South Florida apartment market, there's some margin for error there. And if the condos do have a mild influence, that's still okay, and you're still getting really solid performances.
And that'll wrap us up for South Florida. So for Greg Willett, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics from NPF Research.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.